China's US Treasury holdings fell to a 12-year low. Japan, the US largest creditor, China, its second largest, and the UK, the third largest, all of them cut US debt holdings. China's holdings of US Treasury bonds decreased the lowest level since June 2010. Only Belgium and France among the top 10 holders of US debt increased their holdings, while all 8 other economies reduced them. Recently, liquidity in the US Treasury market has deteriorated significantly. The market liquidity index has fallen to the level of March 2020 when US Treasuries were sold off sharply. And the deterioration in market conditions is approaching that of the global financial crisis. US Treasuries are not only the anchor of global asset pricing, but also play an important role in the global dollar liquidity transmission system after the financial crisis. This means the potential risks in the US Treasury market may have a systemic impact. In fact, the deterioration of liquidity in the US Treasury market this year is not only due to the cyclical pressure of the Fed's aggressive tightening, but also the result of the gradual emergence of structural vulnerabilities that have been building up for a long time. U.S. Treasury Secretary Janet Yellen said in mid-October that she is worried about a loss of adequate liquidity in the market. China had been buying treasuries as a way to keep its currency, the yuan, pegged to the U.S. dollar. That helped lower the value of the yuan and made China's exports more competitive in markets such as the United States. But over the past 2 years, partly due to U.S. pressure and partly as an effort to curb its own inflation, China has allowed the yuan to rise in value. Now China simply doesn't need to buy as much US debt as it did in the past. It is unlikely that China will sell off US debt because of the effects that would have on the country's economy. This helps demonstrate that China may indeed try to influence the course of events in the United States when it perceives a threat to its interests.